Hello, everybody, and once again, welcome to Synanomics. As promised earlier, due to the stellar 12-day continuous run of Tesla, I'm going to cover Tesla today. Yes, there's nothing new about it, but I like to focus more on the financials, its future plans, and what the market thinks about it. So Tesla actually just reported its total number of vehicles sold. They actually produced 442,000 vehicles and delivered 422,000. That was pretty stellar. And they actually gave that in this report, which was quarterly report and came out in April 2023. So again, it actually declined drastically from its peak of 415. That's the all-time peak. If you look at the normal last year's peak was around 315 or so, and it dropped down from there to $100 for two reasons. Number one, the challenges in China, the supply chain issues, and the other production was disrupted, etc. And the most important of all was his involvement with Twitter. So the market thought that he's focusing more on the Twitter, Elon Musk, by the way, I'm talking about, and he's not going to focus more on Tesla. And at the same time, the China issues and everything started coming down that impacted the growth, and stock price fell to almost 100. But the good news is that this year it had a stellar run, and from 100 it has gone 150% up to 250. It was pretty much close last night at 249 something, so 250 close. Now when I look at the graph, I look at the technical analysis, and we'll talk about the fundamental analysis as well. From the technical analysis perspective, looks like still there is some more room to go. In this kind of situations, when you use Fibonacci, you can actually see that Tesla's easily will be very close to 300 or even cross that very soon in 1 to 2 months time. So well, that's the good news about Tesla. So let's look at the financials first, and then I'll come to the business. So actually, as I mentioned, it reported its Q1 2023 earnings report in April, and they actually reported $23.3 billion revenue, which was pretty much 24% up year over year. And as I told you, last year was a bad year for Tesla. From the operating profit perspective, it was 2.7 billion. That was around 11.4% growth year over year. And if you look at from the EBITDA perspective, earnings before tax, amortization, and depreciation, it was around $4.2 billion. That was again up pretty much 18%. So in simple terms for you and for all of us, what is the earning per share? How much one share earns? For this quarter, it was 73 cents. That's the GAAP earning. And from the non-GAAP perspective, it was 85 cents. In fact, last year, for the full year, Tesla reported around $4.05 earning per share. And right now, when the revenue and the profit is growing at around 20-25%, you can easily assume in a very rough way that they will report $5 plus. So even if you take $5 earning per share for the whole year, and Tesla sitting at $250, actually you are actually paying price earning ratio of 1 year forward by 50, which is really not that high for some company like Tesla, right? This is my personal opinion, by the way. If you compare that with Ford, for an example, Ford is already at 20p. Yes, 20p. And I would not recommend you to compare that with General Motors, where that's sitting at around 5. That's sitting at around 5p, guys. That shows that how cheap is General Motor company, but nobody's buying General Motor. Anyway, let's not get there. So if you look at the electric vehicle, and that's where Tesla is pretty much now synonymous to electronic vehicle cars, right? EVs. electric cars, electric vehicles. Last year, there was a growth of 62% in the electronic vehicle sales worldwide, as compared to negative 7% for the gas-powered car. That's what they call in US. We call it IC engine or IC car or petrol car. Traditional car, let's call that. So, in fact, 7.7 million cars were sold, electric vehicles were sold worldwide. And that number is going to go up in next 5 years to 20 million. Yes, you have heard it right, 20 million. And that's the consensus. But from ARK Investment, that's a firm, that's a fund. The CEO is Cathie Wood. She's quite a bullish person, and she's quite bullish on Tesla. And in fact, whatever she has predicted has happened. Even I'll talk about that, what price he's predicting on that. But she thinks that in the next 5 years, it's not 20 million cars, but 60 million cars will be sold. 60. I personally feel that is slightly as exaggerated. She also thinks that 75% of the cars worldwide will be electric vehicle in 5 years, which I think may not be true. Maybe for USA, but not for the whole world. She's a perennial bull, by the way, for Tesla. In her fund, you can check it out. In her fund, which is very much on these robotics and all those, Tesla is the highest holding. Anyway, to cut the long story short, actually there is a huge opportunity out there for Tesla. And now they have like factories in US, it's in California, Nevada, and Texas. China, of course, we all know that, it's in Shanghai. And Europe, they have already a factory in Berlin. All of them are producing cars. Tesla has been talking to Indian government, by the way, to set up a factory in India. As we all know, Elon Musk is one of the brilliant person on the earth right now, according to me. How can he miss India, which is the highest population, right? And the growing retail segment, growing middle class, which I have covered in my previous videos. Right now there are 60 million middle class families, which is going to grow to 160 in next 9 years. So anyway, some of you would like to refer to that. Please look at my video on India. Coming back to Tesla again, guys, this is not all. Right now, all the revenue that you're seeing is predominantly coming from electric vehicles. They have other businesses as well. Cybertruck and Semis, they are going to hit the market by 2025. That will be additional revenue. On top of that, they have robotics and the self-driving systems. That has not come yet. No revenue coming from there. They have the batteries and then the energy storage. Energy storage actually contributed around 1.5 billion this quarter. So it's like a $6 billion annual revenue coming from there. And one more, services. $2 billion was reported for services, right? So around 8 to 10 billion will come from there. So all these businesses, if you consider, is going to contribute to the overall revenue and of course the margin for Tesla. So at a 50 price earning ratio, some of you who are very much, focused on price earning, still is looking quite okay as compared to some other IT and AI companies which are trading at around 200 plus price earning ratio. And as I mentioned, as the other streams of revenue will come, the P will drop. So tell me if you have Tesla in your portfolio. Please leave your comments in the comment section. And if you don't have, are you willing to buy? As I mentioned, still there's room to grow. And as I talk about that, Cathie Wood, for an example, has a price target of, she had a price target of around 3,000 before the split. But we all know that they just split 1 to 3, right? So right now her price target will be around 100,000. So still it will go fourfold, by the way, according to her, in the next 3 years. Yeah, 3 to 4 years actually. So whether she is going to be right or not, let's watch it. But for a good growth, good return, and this is a totally a paradigm shift in the auto industry. Tesla has pretty much become synonymous to EVs. I personally feel it's time to buy. Having said that, this is my personal opinion. This video is for entertainment and educational purposes. Don't forget to consult your financial advisors before making any investment decisions. My job is to bring these updates for you. Remember, this channel is dedicated to create financial awareness so that you act on it and make money. With that, it's a goodbye from your friend Pankaj Sinha. I'll see you soon. Bye-bye.